Mark, would you say the entire problem with the earnings was in the Vrbo unit, the short-term rental unit?
Well, listen, we had broad strength in our core OTA business, and we were very pleased with earnings growth. Adjusted EBITDA was up 42%. Adjusted earnings per share improved by 41%. There was that spot, though, in the report talking a little bit about how our Vrbo division had decelerated a little bit as we really transitioned this business towards a global brand oriented towards the huge opportunity that's ahead of us. But expectations were a little bit higher. We are very confident in the direction, though, and feel good about the trajectory and really how we started 2019.
Let me push you a little bit on that. Is there a concern that perhaps the strategy is too towards the short-term rental business, given there's so many players in the space already? Marriott is entering it in a big way. We also have other companies entering it. And, the amount of listings that you have is so much smaller than the likes of Airbnb or Booking, for example. What would be your strategy?
Well, Expedia Group has a larger strategy, which is really as the world's travel platform. Alternative accommodations is one piece of it. It's an important piece of it, but it really is just one piece of what is a massive industry. Travel is a $1.7 trillion industry, and essentially we want to be the place across all of our brands where travelers can come, whether they are corporate travelers or leisure travelers, whether they're looking for a traditional hotel, an activity, a flight, or yes, an alternative accommodation stay, and find that at an Expedia Group brand. The alternative accommodation space, honestly, it's quite in its early stages. It's well over $100 billion market. It's just in the early days of going online. We look at and see it as a huge opportunity for us. And quite honestly, we're just getting started in the space, but we think we bring something super unique to the table. We're excited about Vrbo's progress, but again, it's really part of the overall Expedia Group story.
Good morning, Mr. Okerstrom. It's Guy Johnson in London. Is Airbnb a different company in the public markets? Is it a different competitor once it goes public?
Well, I think that's the question. I think we've seen some very well-funded private companies exist for a very long time, and oftentimes they play by different rules. Once you get under the spotlight of investors and analysts and quarterly earnings, sometimes people do behave differently. I think we're very interested to see how going public, if they do indeed go public later this year or in 2020, how that does change their behavior.
Are you going to have a deal with United come October?
Well, that is a great question. I think we would be absolutely bewildered if we didn't have a deal with United. Listen, we've been in business with United and had a very solid partnership with them for over 20 years. The world has changed a lot over those 20 years. Expedia Group has gotten a lot bigger and actually gotten much more sophisticated in terms of the way that our strategic partners are taking advantage of the value that we can bring. We hope that United makes that journey with us and can start to explore many of the ways that we can create value together above and beyond what we do today. That's the dialogue we want to have. But at the end of the day, they're their own unique business. We have a very diverse set of partners. We'll be okay either way, but we really want to get down to the table with them and really talk about these ways that we can create more value together. How can we expand the pie?
How are macroeconomic factors such as Brexit, which hasn't even happened yet, impacting your international business?
Well, Brexit has had some unique impacts, particularly on the UK market. In the first quarter, we saw a slowdown in bookings outside of the UK. We saw a slowdown of bookings into the UK. It's hard to tell, given Easter timing in April, whether or not that type of concern is going to continue. With the date being pushed out, we're hopeful that the economic green shoots we're seeing continue and translate into strong travel in the summer months. But we'll see. And the rest of Europe, for us, the rest of our international business remains pretty robust. And from what we can see, it remains a pretty healthy travel market on an overall global basis.
And how were you impacted? Just give us the anecdotal evidence, if you like, from the 737 MAX debacle and other, company-specific things like that.
Well, anytime that type of thing happens and you see a number of planes grounded, there can be flight cancellations as capacity gets pulled out of the system. We've been certainly very active with our airline partners and also with our customers to make sure that we can accommodate any changes in schedules. It's a key part of some of the value we bring, both again to our partners and our customers. But the great news is our airline partners are very adept at dealing with these types of situations. I think they've handled it very well. Customers are getting on flights. We're helping them with that, and the world continues to travel.
Kind of just asking a similar question to the one that Vonnie asked about Brexit. Can I ask you whether or not the French protests, the Gilets jaunes protests, have had any impact on bookings into the French tourist industry?
Well, we've had some very strong growth in France coming out of last year and all the way through this year, and it's really been a pleasant change. Of course, with the protests and actually some of the terrible terrorist activities, France had struggled. But overall, it has been relatively strong. Certainly when these protests are going on, just like when any isolated event is going on, it can dampen travel into that specific place. And certainly we have seen some of that in the past with Paris specifically. But overall, travel to France is strong, and we've been working very closely actually with the French government to make sure that the world knows that France is open for business. It's a great place to go.
One of the biggest trends over the last few years has been the emergence of the Chinese as a serious force in tourism. Looking back over the last quarter, looking back over the last few quarters, give me a sense of what is happening with that market. Is it continuing to grow strongly? Has the slowdown in the Chinese economy had any impact? Has the currency movement had any impact? It is a huge and growing factor.
Well, China is absolutely a huge and growing factor in the travel industry. And one of the big factors that China is driving is really outbound travel. The Chinese traveler is just becoming a significantly larger piece of the movement of people around the world. We're very happy to power with our global inventory, our lodging inventory, many of the largest players, Chinese-specific players, and we are taking advantage of that outbound travel. To be honest, we have not seen a significant slowdown. Certainly, if you read the headlines, it sounds like there's a big slowdown, but it really continues to be a tidal wave of Chinese travelers getting out there and exploring the world, and we're happy to be part of it.
Mark, what are you going to do to cut costs more? I mean, your stock has been in a pretty tight range for, maybe 2 years now. Presumably, you want that to break out again at some point, and cost cutting might be something that would encourage the street. How are you going to cut costs?
Well, first of all, last year was our strongest year of earnings growth that we've seen in a very long time, and we've put that together like we are putting 2019 together with a very balanced approach. We've been incredibly disciplined with our sales and marketing spend, being very data-driven and analytical, and we've also taken a very rigorous approach to making sure that our overhead costs are in check. So we feel very good about our cost management, but at the same time, we are stepping on the gas on global expansion. We're up to now 1.1 million properties globally on the platform. We're really focused on being locally relevant globally, and we think that can add some nice revenue acceleration as we move through the year, which combined with cost control could drive a very exciting story for 2019.
Can I just ask you for a little bit of confirmation on what is happening in the U.S. economy right now? I've only touched on this a little bit earlier on, but I'm curious. Today we had a really strong payrolls number come out. The U.S. consumer looks to be in great shape. Productivity is rising. That, in theory, should drive further wage growth further down the road. What do you see in the U.S. economy right now? Is that kind of story reflected in what you get in terms of the data that you collect?
Yeah, certainly. Our U.S. business has been and continues to be very robust. Both traveling domestically and traveling internationally, the U.S. consumer seems to be in very solid shape and is booking their trips. So, absolutely, I think the U.S. continues to be a beacon of economic strength, across the globe.